This week, we have Tesla earnings, and I am pricing in a 10% to 15% move within the next 7 to 14 days. And I personally believe, and I am betting, that this move will be bullish and to the upside. In this video, we're going to talk about why I am bullish, go over my upside targets, and more importantly, cover what the worst case scenario will be if earnings disappoints. My name is Peter DiCarlo. I'm a full-time trader for the past 11 years. I've grown my fund to over $5.5 million in profits. I stick to a very simple two-step trading system. I don't care about fundamentals or the current news cycle. If my criteria is currently in the market, then I will take a trade. Tesla has been one of our biggest profit winners over the past couple of years, closing up about $1.94 million of that $5.5 million in realized profits. And best yet, we only have a 65% win rate. Now, when we look at the current setup for Tesla, there are a lot of things that we need to take into account, and that is what we are going to cover in this video. The last sizable breakout that we had for Tesla was the one that happened here in September up to the end of September into early October. If you guys and girls remember, we were trading this compression and this squeeze all through the summer and then finally got the breakout that we were looking for. And that's the last time I really booked a big profit on Tesla. Now, I posted a detailed written breakdown over on my X account, and we're going to be using this as the backbone for this video so that you can get a good understanding of why I am currently bullish. Now, since that massive rally back in September, we've basically just been compressing right here between $420 to $450. When we have bullish market structure, what will normally happen is price will expand, which is what these breakouts look like, and then compress for either multiple days, multiple weeks, or sometimes multiple months. Now, the fact that this support level at $420 has been holding this entire time, that is a good sign that we are still going to remain bullish because structure is holding. Now, market structure is one of the main things that we use within our analysis, and it's the first part of our two-step trading system. We want to make sure that we are constantly trading structure that is bullish. This means that price is breaking out to the upside. When price pulls back, it is not taking out a previous low, and then it will bounce again into a high, back into a higher low, and then again into a high. This is the type of market movement that we want to see with a stock. And currently, that's exactly what is happening here on Tesla. Now, this support level right here is called a liquidity zone. Now, liquidity zones are very important because they are strong resistances and strong supports in the market. And the more times that we tap a liquidity zone, the higher chance we have for this zone to break, much like what we saw this resistance level here throughout the summer of $360 down to about $345. This is what we're going to talk about later on when we get into the worst case scenario. But as of right now, the fact that we are still holding this level here and each and every single time that we have pulled back, we've bounced is a very good sign. Now, the first major reason that I'm very bullish on this is because of the $100+ million in confirmed call options that have hit the tape in the past month. We did an entire video breaking down all of those options positions in last week's video. If I actually go into my hour chart here, you'll see that I actually tagged all of the call options that have hit the tape in the past month. And if we head over to our THT heat map, which all of our Discord students get access to, we can just search for Tesla and you'll be able to see that there are over 11 call options that have hit in the past month that are deemed extremely unusual, with expirations going all the way out to 2026, 2027, as short as 10/31/2025, and the list simply continues. If you want a full breakdown of all of these unusual options alerts, go back and watch the video from last week. When you see this kind of size, it is not random. It's normally institutions that are placing positions as we head into either earnings, a potential news cycle. Maybe these are insiders who know that something specifically is going to happen. And the fact that most of these have expirations of 2026 to 2027 suggests longer term conviction. They're buying right now, which is important, and they're not waiting until after earnings. So there is a chance that most of those positions that are being built today have nothing to do with earnings coming up this week. And maybe they have some sort of insider knowledge, or they're placing some sort of bet based off of Optimus in the next year or two, based off of robotaxi expansion in the next year or two, based off of full self-driving developments in the next year or two, or maybe even data centers. I'm sorry, energy, not data centers. So my point is they're building out these positions for a specific reason. And my thought process would be that they would probably not build out these positions before earnings if they expected earnings to be crap. Because if our worst case scenario actually plays out, then that means Tesla is probably going to drop about 20%. And I'm sure that they're going to want to actually build the position after earnings instead of doing it now. If you've been trading for years and still cannot find consistency, then listen up. I've grown my portfolio to over $5 million in the past 11 years using one simple system. And better yet, I've helped over 20,000 traders become profitable as well, with as low as $10,000 to as much as $3 million. These are the exact indicators that I use each and every single day to analyze the market within my videos. And you can learn the entire strategy completely for free with our trading library down below. Go ahead and tap the link, start trading with a plan, download the indicators, and no longer guess what you're going to do each and every single morning. It's free, and I promise it will help. Now, another aspect of this analysis is insider confidence, right? Elon has been buying shares himself, adding even more conviction to this pullback, and that this is not going to break structure anytime soon. Because once again, a CEO is only going to usually buy shares if he thinks that they're trading at a discount and has some sort of information. It's the same deal when a company does share buyback programs. They are only going to actually accumulate shares in their company if they think it's undervalued at the time. Now, another aspect is going to be the weekly BX trender, which is going to track macro buying pressure. If we zoom out to the weekly chart and we bring up the BX trender, you're going to notice that it is currently green. When this indicator is green, it means that macro, so bigger time frame, buyers are currently in charge. And more importantly, when it is increasing and showing bright green, that means that we are seeing a significant increase in buying pressure. So even though price is not trading at a discount right now, buying pressure is still in the market and buyers are still stepping in. Now, moving back to the daily chart, let's talk about price targets. The first upside target will be a move to $480 or a 9% upside from current levels, which would number one, test previous highs, and number two, would hit our first standard deviation band. You will see here there are two bands above. This is going to be our price deviation bands. So as price normally moves into these bands historically, it is normally a good sign that price will reject. Now, there are times where a stock will go parabolic, such as Tesla here in November of 2024, where it will just continue to break out. But in most cases, using this first band as a short-term price target is going to be a good hypothesis, especially from a risk management standpoint. You can see right here that that move up to previous highs or up into that first deviation band is at least 9%. And I do think that potentially that day of earnings on Wednesday, the 22nd, that level could get hit. The second level and the more egregious level and aggressive level would be up at $550. That would be about a 23% move to the upside, and that would put us up in this 2x standard deviation band, which is right up here. Now, if you remember, our price target for the end of 2025 for Tesla, dating all the way back to April, was right around $500 to $550, which this lines up with to absolute perfection. So at the end of the day, I think that this move in the next 7, 10, maybe 30 days is easily going to happen. And we've seen this happen before where we get 20% moves within 7 days. So it's not that crazy. Now, from a fundamental standpoint, which I personally don't take into consideration, we talked about this prior, there are a lot of things that come into play here. A lot of it is going to have to do with guidance, optimism. A lot of it's going to have to do with that earnings call itself and not the actual numbers. I personally don't think the numbers are going to be good, but once again, I don't play the fundamental game. There are great fundamental analysts out there, and I highly recommend that you follow them. But from a technical perspective, these are the levels that I will be watching. Now, the last thing that we have to talk about is the downside risk. And this is why risk management is so important. One of the things that permabulls or just people in general on the internet do not want to talk about is the worst case scenario and what could happen if you lose money. We talked about this earlier, but we only have a 65% win rate when it comes to Tesla, and historically, a 61% win rate. So that means that not only are we going to lose pretty frequently, we have to actually plan ahead for what will happen if things do not go our way. That is called proper risk management. Now, when we look at this downside, there are basically two main things that I want to cover here. The first thing is this liquidity zone. We talked about this prior, and yes, it is a good support right now that has held. But when we build these liquidity zones, whether it's a resistance and then we end up breaking through it, or it's a support and then we break down through it, these liquidity zones tend to act as very strong levels that once broken, we normally see massive volatile moves throughout them. So if $420 is broken, this is where we have to remain objective and understand that we're probably going to see a significant sell-off. Now, I have this area on this volume profile to the right, which is this gray indicator. This is called the volume profile, and this is our specific volume profile, the THT trading volume profile, which goes off of a couple of different aspects than a normal volume profile. You can get access to that indicator completely for free by just going to the course library down in the description. You'll get access to the free BX trender here in step 1. All of our courses are free, but the volume profile specifically is part of step 3. This indicator is going to show volume, but not where buyers and sellers are getting in on that specific day. Normal vertical volume is going to show how many shares were bought and sold that specific session. This is going to show us where in the past 150 days most of the volume has been. And these thick areas of volume, these bigger horizontal bars, are major resistances and major supports. And this is normally going to be where price compresses. You can see here that we had a ton of compression on Tesla right here between 320 to 350, which is why so much volume was being built up here. We've also had a lot of volume building between 455 to 420, which is why we're seeing horizontal volume on the volume profile right there. Now, these thin areas on the volume profile, whether it's to the upside or to the downside, act as a price vacuum. Once price pushes through that volume level, we will see massive breakouts to the upside. Same deal if we can actually push over 450. There's no volume here, massive breakout to the upside. But the same exact principles have to also be established and understood that if it happens to the downside, a price vacuum to the downside can happen just as easily. Which means that if this $420 support level breaks, price will end up filling this volume gap down to $350. That would be a worst case scenario and about a 15% drop. And then I do believe that if that happened, price would bounce at $350. All of these institutions who are loading up back here would most likely reload again. And I do think that we'd see another push back up to 550 by the end of this year into early next year. Now, for some of you who are newer to trading, you're probably watching this video and thinking to yourself, well, if this guy is just sitting here and telling me that the stock could either go up or go down, no shit. But the thing that you have to understand is that the goal is not to necessarily predict what is going to happen. It's to understand what specific triggers that are presenting themselves in the market are currently going to give me a specific result. Because the whole point of that is so that we can replicate this later. I could have just came on and said, we're either going to go up or we're going to go down. But the whole point is understanding what specific trigger is going to force that to happen. So if we go back and we actually use the principles that we talked about in this video, looking at September's breakout, you will see the same exact principles that we spoke about being deployed here. Resistance liquidity zone, very little volume from 350 all the way up. If this liquidity zone sweeps, buyers are going to push us up right into that resistance level. We can even go all the way back to July of 2024, which was actually like one of my best months trading Tesla. You can see that I really didn't touch Tesla much at all until June and July of last year. And then the bulk of my profits have been made in the past 18 months. The same exact principles that we just spoke about apply here as well. And the good thing about this is you'll get to see to the upside and to the downside. In this case, we have a big liquidity zone that is built right here at $188 to $190. If the liquidity zone can be swept, price will fill that price gap up to $230, hitting 2x deviation, normally a place of rejection, and that price of vacuum on the volume profile will end up playing out to perfection. And that's exactly what happened. I mean, think about it. With months of compression, we saw literally a 40% move in 11 days. The same exact situation that was happening then could be what's happening right now. Price comes up into that 2x deviation. Now, the difference here is we did not see buyers coming in on the options market. That's a big aspect of what's making me so bullish at this point. But once again, price vacuum seated right here. If price gives up this liquidity level, this time it's at $230, then we will see a significant drop to the downside, which is exactly what ended up happening. Now, something that we didn't cover in this video, which we cover in a lot of our videos, is the smart money zone. Smart money is normally going to be the lowest that an institution allows price to pull back into before they load up. And this is one of the strongest aspects of our two-step trading system, which is part of step 2. You can learn about that right here next to the volume profile course. But smart money steps in, saves market structure, and then breaks out to the upside once again, and we redo the entire thing all over. Remember at the beginning of this video, we talked about market structure. This is what we want to see. Big breakout, reload in the smart money zone, big breakout again, just like what we saw right here. So as of right now, I am bullish on Tesla. Does it mean that price has to pull back or that it won't pull back? Of course not. Whatever ends up happening here, I have no true idea. My goal is to very simply look at what's currently on the table, evaluate all of the information that's in front of me and make a sound decision. And as of right now, the position that I'm still holding on to, if we go into our THT heat map and we go into my portfolio data with all of my open positions, I am still in my Tesla 4/17/2026 $550 calls. Now, this position I have specifically been rolling, which means I've been closing my old calls and opening new calls for the past couple of weeks. If we go over to the recent trade log, you can see that I ended up closing out $32,000 in profits on 10/1, $58,000 in profits on 9/15. And so each and every single time I basically close out a call option. This one was 3/20/2026, $400. And then I open up a new one. So the thing that I want you to understand first and foremost is purely the risk management that I currently have in play. I have made almost $2 million in profits on calls for Tesla in just the past 18 months. The position that I currently hold is only worth about $75,000. And I have closed over $125,000 in Tesla profits just in the past month, basically 2 months, we'll say, since September. So even if the entirety of my position goes to zero, and if the worst case scenario happens where Tesla shits the bed down to $350, I am fine. I will literally give back less than 1/20th of the profits I've made in the past 2 years. And that is how proper risk management works. I'm not loading up with everything that I have. I'm not taking my entire net worth and overloading it into a position. I'm using a very strategic system. I am using proper position sizing. And no matter what ends up happening, I will be fine.